Thank you. Thank you. If you are leaving, we will miss you. If you are staying, thank you for quieting down inside the playbook of how the Knicks blew game one. I mean, too soon. On how top wealth managers leverage ETFs and drive client success. An exciting panel to close out the day. Advisors working directly with clients. I'm going to let the panelists introduce themselves. Christina, if you want to take it away, we'll just head straight to.
Great. Is it on? Yes. Hi. So my name is Christina Schatz. I am an advisor at Morgan Stanley. I'm part of the Gotham Group in New York, which falls under the sports and entertainment division of the firm. Simply means the majority of my clients work in the world of sports and entertainment. I started my career as a portfolio manager, and I realized kind of early on that was not for me. Though I appreciate stock selection and all the analytics that go into it, it's just boring. So I realized that I wanted to build out my relationship with my clients, and I modeled after the family office. So we pay your bills, we manage your life, anything from the super exciting to the mundane, we wanted to do it. And as you can imagine, that kind of service to clients is time consuming. And so I realized that I couldn't do both, act as portfolio manager and family office manager. So we outsourced the portfolio management. And no matter how much your clients like what you do for them and they appreciate you, the fact is if the S&P is up 20% and you're only up 12, you've got a problem. So we turned to ETFs, and I created many ETF models, which we now have incorporated in all of our clients' portfolios. I like to say I'm not a doctor, but I take a quote from the Hippocratic Oath, which is, first do no harm. For me, it's first, don't do anything stupid. And ETFs, and again, our clients come to us, they trust us with their life savings, ensure they safeguard their assets and help it grow. So I take that job seriously. And ETFs has kind of helped how we do that for our clients and make sure that there's no surprises. That's kind of a little bit of me and how I've evolved with ETFs.
Jackie.
Okay, I think mine's on too. My name is Jacqueline O'Prien. I am with Alden and Associates. I'm based in Canton, Ohio, so Hall of Fame city. And you pretty much said everything that I would say. So I work with a lot of business owners primarily, and those are individuals that they want to get into the weeds on everything as investors. And so what I do to leverage in general, the way that I developed the ETF strategy is, like she mentioned here, to focus on the service that I'm giving them. And I have that conversation with them that ETFs are part of our portfolio. ETFs are what we use in order to offset some of the everyday type of fluctuations and decision-making that needs to happen. And we can focus on the things that we really should be getting into the weeds on, which is different for every client. So we will strategically use ETFs throughout a portfolio for those reasons. And from there, we can just push forward on other things and use and leverage other assets for different strategies that we're using. So.
Corey Franco, Noble Bridge Wealth Management, founder and president, independent RIA since 2008, 26 years in financial services. I'll be 50 this year, so that's half my life. And I spent about 18 years in corporate, predominantly on the product side, building platform or suite of tools and advice or components of advice. Today, the firm that I've founded, my role is predominantly to lead the business as an entrepreneur and to ensure that my team and our clients ultimately have the tools and the process and the capabilities to meet their end goal or objectives. We leverage ETFs in a number of different ways. We've even created some solutions that have worked and some have not worked in terms of product sets and how we support our advisor community, team members, and just glad to be here today. Thank you.
John.
Good afternoon, everybody. My name is John Colucci. I'm with the Alden Investment Group. started my career at a wirehouse and realized I wanted to be the one keeping the lion's share of the commissions. So I became an independent and joined Alden. I've been doing that on my own now for the past 8 years. I use ETFs in 3 main ways. First, I use them for clients that I don't really want to talk to all that much, whether it's clients that I shouldn't have exposure to in my book, or helping somebody else out, or they're just difficult and I don't want to invest my time, energy, and effort giving them stock advice that they're not going to appreciate. I buy ETFs and I build a simple portfolio for them. So that's number one. The second, if I'm deciding to get in the weeds a little bit and try to time the market, which I have an urge to do all the time, it's a great way to add exposure or take exposure off the table quickly with limited amount of trades. And lastly, I use them for things I just don't really know about, whether it be sectors or industries that I don't really want to get in the weeds on: cryptocurrency, fixed income, hard assets, etc. If I don't really know about it and it's not one of the individual stocks that I generally cover for my clients, I use an ETF to get that exposure. For example, healthcare, I don't really know much about healthcare. Maybe there's only 3 or 4 stocks that I track in that space. If somebody wants exposure in it, I use a healthcare ETF. I myself am a dinosaur. I like picking the stocks. I like building the portfolios. That's what I get paid for. ETFs are a nice way to keep costs down if you're not going to take that level of conviction for your clients.
Lee Conti, 28 years of helping RIAs and family office strategize for some of the offerings that they put forth to their clients of significant wealth. I'll be 49 this year, not 50. And we'll kick it off with question number 1. And most advisors would say that ETFs have actually become indispensable when it comes to constructing efficient portfolios. If you guys want to just talk for a few minutes about, the top 3 or 4 benefits that you're seeing when you're looking at constructing that and working with your clients. Anybody want to start? Corey?
Sure. It's a very broad question for us. It really in part depends upon the needs or the objective desires of the client first, right? So there could be an example where a client is just looking for leverage with individual stock participation, in the sense that it could be a NVIDIA or a MicroStrategy based ETF. Those have become more and more popular. But it could also be just hedging or other forms of leverage within the client portfolio as a satellite. We also have created strategic partnerships with certain providers. JP Morgan Asset Management, I'm not sure if they're here, but as an example, we will utilize their 55 IP program. So more of a comprehensive model set where the process is very efficient and streamlined and very much controlled as far as onboarding clients, as well as rebalancing, as well as raising cash. That program is kind of unique in the sense that it also allows us to not lose our autonomy of ideas or creation of value, where we can continue to hold individual fixed income in those portfolios alongside ETF products, as well as individual stocks or even options or whatever the case may be, right? So it really kind of depends on where we're trying to focus in a particular case by case.
Christina?
So I have a couple of things. One, I got a phone call today from an accountant trying to do estimated taxes for a client. Save most of the money with me. They have one outside because it's a trust for the kids. We have a pretty big portfolio. We have $150,000 in capital gains. They have half the size. They took $500,000 in capital gains year to date. So ETFs only do that if you tell them to. And I think that's a big deal. And that's a heck of a call to get from the accountant that you owe about $120,000 in taxes going forward. So that's one way where I like, and the fact is an ETF, it's going to do what it tells you it's going to do. If it's an SPY, it's going to be the SPY. That's the one thing I got sick of, is making excuses for money managers that tell me they're going to outperform the market, and they didn't. So at least when I tell a client, this index fund is going to match the index, it's going to match the index.
John?
So a couple
you look like you're
adages,
ready.
a couple adages that I want to put in there to build off of that, because Christina, I think that was really well said. When you use an ETF, you know what you're getting. It's not some mutual fund manager who's going to come in and do weird things and then slap you with an unrealized or realized tax bill at the end of the year. I find it really helpful that these strategies are super simple and low cost. You know what you're getting with each of them, and you can build out a portfolio that adds appropriate levels of risk exposure per position that you deploy. So for example, if you have a third of the portfolio in the SPY, you know that that's your market neutral. That's the market itself. You can then look at it, as I explained to my clients, and please feel free to use this if you like it. But I talk to my clients about Neapolitan ice cream a lot. And I say, you have your vanilla exposure, which is a little bit less in the market. You have the market, which is chocolate. And then you have things that are a little bit more exciting, whether that's your strawberry, your pistachio, whatever you want to call it. That's your more aggressive stance on the market. So to me, a sector conviction in something like tech or communications would be more like that strawberry. Something that's a little bit more conservative, like a consumer staples ETF, is like that vanilla. It really translates well with people and explains complicated concepts simply. And then lastly, when it comes to an apples to apples comparison against mutual funds, I really don't think that exists. I like to say an ETF is like the iPhone. They were created around the same time. A rotary phone was created in the 20s, and surprise, surprise, so is the mutual fund. So when you get a mutual fund portfolio back from an advisor that you're competing against, and it's all 5-letter ticker symbols, I get super excited to show them the transactional fees on those funds, the underlying costs on those funds, the tax ramification of those funds in a taxable account. And an ETF is really just a home run when you represent it in that way.
Jackie, what are your thoughts?
So the other component to that, kind of tying a lot of this together for me, is I do a lot of individual owner retirement plans. And so just to set up a nice, well-rounded portfolio, I leverage the ETFs on the bulk of the spaces. And then in other accounts is where we can, because we've saved on that retirement plan account by leveraging the ETFs, we have a portfolio that we can review on whatever regular basis is determined. But especially with the oversight that those retirement plans have as ERISA plans, that cost is being so much smaller. I'm now able to put more resources and more of the expense into things like trading a fixed income portfolio that we're leveraging for some other investment that some of my business owners are trying to get into. And we can go more deep, and we can hire a specific manager to do something very specific. And we don't even need to concern ourselves with what's happening in the retirement plan, because that's truly money for those people that are over here that we're not even really going to look at. So that's the other component, kind of putting all the pieces together there, I think.
Christina, you touched a little bit on taxes. Anybody want to take that and go a little bit deeper on taxes and liquidity and how you're factoring that in? If you want.
So back in the day, there was a structure from parametrics. So I don't know if you know about it. So what they did was they deconstructed the S&P 500, and they had 300 positions. And what they tried to do is have a tax efficient S&P 500. So I used to call it the Coke and Pepsi, right? They would, if the market went down, they would sell Coke, buy Pepsi. So you're able to take a loss inside that portfolio and still keep your market position. So that has changed with the advent of the ETF. Parametrics still has that product, but it's a deconstructed S&P via sector. So you've got your consumer staples and your consumer cyclicals. But what you do is you have a consumer staple with an iShare ETF, sell that down, buy the Vanguard ETF. So it was really a way of being tax efficient, taking losses when you have a volatile market. So I think last year the S&P was up, 23%. This was up 23% and took losses for the year. So I think ETFs give the flexibility and the ability to do that, not just owning the S&P 500, and whether you deconstruct it via market cap or sector weight, being able to swap out value, Vanguard for iShares and the like, I think it's just a great strategy.
John?
2 quick points on that, building again. You could do that all day. Just get out of the SPY, get in the VOO, and you're long the same market exposure and you're harvesting losses. In markets that are moving quickly like we see lately, it's a great asset. Eventually losses become assets for your clients. I have those conversations a lot. Same day liquidity is fantastic. Trades like a stock. You're not waiting until 4 o'clock, because on certain days, 4 o'clock could mean 4 percentage points. when you want to be tactical, you got to use an ETF. A mutual fund just won't cut it.
So there was a lot of great comments, and throughout the day we heard a lot of strong information. This is a panel really working truly with clients on a daily basis. So I want to just sort of shift a little bit to the human and the emotional side of the investor for clients who are constantly peppering you with their cocktail party education tips or their barbecue tips that they got from their friends. How are you using ETFs or ETPs for maybe an exposure to crypto, gold, private credit, so that they can get some exposure to trends or assets? And if you're not, that's okay. Corey, you look like you want to jump in.
I'll take it. So for starters, we have sort of used a number of these product sets along the way. As an example, we have used credit products that are a little bit more in the CLO or alternative side of fixed income, right? So that would be one set. As far as the Bitcoin, Ethereum-based product sets, or I have a colleague who just launched a fund that's gold and Bitcoin combined with leverage. I mean, these products are, to be very frank, they're not mainstream enough for us yet. So we're typically looking at less than a 5% allocation to a combination of Ethereum and Bitcoin. And the Bitcoin ETF with gold is not on our radar. We've held gold for an extended period of years now. And so Bitcoin to us in particular, it's just not as exciting, I think, as Main Street has alluded to, in my opinion.
Anyone else want to jump in on that one? Jackie?
I will on that one. That also goes back to, the comment made earlier, I think, that just about when it's something that I don't know very well, let's use an ETF. If it's something that, you're golfing, speaking of a client, client's golfing and his buddies are telling him about, I have exposure to this and I bought into that, this, that, and the other thing. Unless my client has a very specific thing with commodities or any type of alternative product or crypto, I might try to work with them on that depending on the dollar amount, things like that. But if they just want to be able to say that they've got some exposure to it, then we can use an ETF, give them some of that exposure so that they can, on the golf course next week, say, oh yeah, we picked up whatever it is. And then I'm not as concerned about making sure that the bits and pieces are exactly correct. And we can just say, okay, this is tracking whatever the index is on that, the gold market, whether it's Bitcoin and Ethereum, like you mentioned, then at least they can say that they have that. And I'm still feeling comfortable and confident in where that lies in the portfolio and that I'm not the one making those specific decisions about what is held inside of there. So it does really help on that level.
Can I just add something?
Sure.
We actually lost our first client this week to Bitcoin. First time. In fact, it was a friend from high school that I was managing her account. It was a few $1,000s. It was just, more of a gesture. And she's a video producer, and she's actually at the Bitcoin conference in Vegas, and she's working, and she's listening and editing and doing her job. And she called me. She said, Corey, I think I want to take this account and put it all in Bitcoin. And my explanation to her was, well, we can do that through an ETF. And her response was, well, why would I need to do that when I could just buy the coin? And I said, well, unfortunately, I'm not in a position to really solve that for you. I mean, technically I could, but is it worth our effort and time? Maybe, but these product sets really do solve that, right? So, but it was very interesting to see it actually happened. So, maybe that's a contrarian indicator, in my opinion.
So sticking with clients and the emotional side of them, and I'm sure for everybody on this stage, all of your clients listen to you all the time for everything. But when you come across a client and you're recommending an ETF or an ETP, and they're not looking to take your guidance, how do you handle that, Christina?
They're not my clients. I don't have that kind of client base. most of my clients come to me, and it's a very trust me situation. They just not my clients.
John, you were trying to hop in on the end on the last.
Oh, that's strike one. You get 3 of those, we're done.
On the last series. Okay. So in the write-up, one of the important features in the write-up for this session was using ETFs to scale. So everybody has so many hours in a day, so many hours in a week. If you want to talk about leveraging ETFs but without taking away the quality of what's happening with the client and how you're using them to, over the years, scale your practices. I know some of you have been using ETFs for 10, 15 years. John?
So it's a huge time saver. As I said before, the majority of the portfolios that I manage are individual stocks and individual bonds for clients. I like it. It's not necessarily the route everybody's going, certainly not the trend in the industry, but it's what resonates with me and it resonates with my clients, so that's why I do it. ETFs make the work so much easier because you don't have to look at filings, sit on earnings calls, track individual stocks. It's just a great way to add broad brush exposure. You can be as active as you want. Maybe you want to focus specifically on the financial planning for somebody and outsource all the investment management. Back in the day when I was at a wirehouse, it was SMAs. I think that's a thing of the past. It's either an ETF to me or you're actively managing the underlying positions. I don't really see any other way about going about it, but if somebody else has other ideas, I'm happy to learn something here today.
Corey, you want to shed some light on that?
Yeah, so as an independent RIA, we've evolved since 2008. So in 2008, right, the primary ETF provider was Wisdom Tree, right? So we were taking fundamentally weighted ETFs at the time and creating modern portfolio theory, baskets. We've evolved, and then we decided to leverage our great friends at ETF Global and their quant and qualitative database, and we created our own robo-advisor. Being on the Schwab side of the custodial solution partners, we were able to leverage IIP. Well, guess what? Clients didn't care. The team, our other advisor colleagues, didn't care. In part, they kind of viewed it as a little bit of competition, taking away that value add or customization perhaps, but not entirely, which is where we've kind of landed today, which is we do leverage JP Morgan Asset Management in their 55 IP, as I mentioned, because we can customize within those portfolios. We still use ETF Global Research predominantly to come up with custom or individual sort of kind of off the shelf selections that fit into different categories or thematics. As far as, conversations with clients and how we present them, we will use the ETF Global data. We also do have relationship with Stratify. So looking at, portfolios in a risk management context exclusively there. So it's really kind of evolved, and it's also giving us the scalability where we can see more folks and really manage more accounts that way as well. But not losing John's expertise of customization of single security in the combination.
Any other perspective on that, Jackie?
Yeah, I'll jump in on that. The other thing that, as we're talking about all this, that I really like to leverage the ETF for is when I'm speaking with, say, a nonprofit organization, and maybe they're working on an investment policy statement, and they're not really sure, how to go about diversifying properly with the money that they have. I am able to coach them through, let's leverage some ETFs so that you have the exposure without having significant costs associated with it, as well as that transparency that you get with ETFs versus a mutual fund. You only know the top 10 holdings in the mutual funds. So that is very, very nice when working with a committee that is reviewing these on a regular basis, that you can actually go through and see what is being held, and you can find ETFs that are environmental, sustainable, all that, so that it works with that organization's focuses. And then you're not spending the significant amount of money that you would use by hiring an individual manager, whether that's through a mutual fund or an SMA, that type of thing. So the transparency is huge too.
So shifting away a little bit from the day-to-day dealing with your clients, if you were here throughout the day, listening to all the sessions upstairs, downstairs, you would start to think that ETFs and ETPs could do no wrong. They're obviously not always the right fit. So when do you see them as not being the right fit? Christina?
So I don't think they're never the right fit, but I will say one thing. Is anyone here in the AI world? Because we can use a little AI, right? I think we're really slow to take that on. For example, we all know how to create a portfolio of ETFs, but we also know that if inflation's coming, I can tell you that the AI is going to see inflation before the rest of us do and make these adjustments. We need AI to step it up because we're kind of lame, right? All we're doing is the same old thing. And I think that's a missed opportunity. I haven't seen anyone use that. We know that whether it's when the VIX hits 45 or other indications that'll happen, when inflation hits 4% or it goes below 2, there are triggers that we know you need to refocus and change your ETF portfolio. There's just nothing like that. So that's where I think we're really lacking.
John?
I think ETFs are wrong always. To me, it's about underlying holdings, individual stocks, build it for a century, sit on these names, trade 5 to 10% of your portfolio on an annual basis situationally as needed. Do the work. At the end of the day, do the work. If I bring my car to the mechanic, I want the guy I'm bringing it to fix the car. If somebody brings me money and says, put it to work, I want to put it to work for them. I don't want to outsource it to anybody. Not a robot, not a Bitcoin, not a computer. I want to buy business models that I understand because I'm an American capitalist and I believe equity is the way to growth. It's always been the way to growth. So just buy the underlying, do your job, earn your 1%, and that's it, period.
So I'm going to come back at you. I say to my clients all the time, if you just want to own the S&P 500, don't come to me, go to Vanguard, right? I'm not here for that. I do everything else for my clients, and I mean that. Famously, there was a call in our office. One of our clients got a flat tire. They called us first. Like, we get all the calls. So if you want that, don't come to me. But if you've got future ex-wives, you got business problems, you got shit everywhere, we're your people. So I get you, and I believe that I do my 1% probably somewhere else.
Can we curse?
Oh, yeah.
No,
I mean, my attitude. Can we
it
curse?
is the last session of the day, but
Yeah,
I think that's for the
you
bar.
could
And the bar is set up,
Go
but
for
I went to go get a water. They couldn't even find me a water. I had to come in here to get a water. Corey?
The one thing I would add is the last group was talking about the use of derivatives. I do think that it's a bit of a black box and an unknown right now. I do think that could very well likely be an area where we get disappointed.
Jackie? Go ahead, John.
If we can curse, I'd just say buy the fucking stock. If you want AI exposure, buy NVIDIA. How do I quantify this?
I thought you said the Apple versus the
It
rotary.
is. No, this one was my favorite.
Rotary.
This one was my favorite. The first stock that I fell in love with, absolutely, was Procter & Gamble. I saw it on a Dividend Aristocrats list when I was working at Merrill Lynch. And I said, I know what they do. I shave with a Gillette razor. I don't want dandruff, so I use Head and Shoulders. And then when Tesla became all the rage, which was great, I said, I can't guarantee you Elon Musk is going to get to Mars, but I guarantee you if he takes a team of people up there, P&G products going with him. So to me, at the end of the day, 100 years forward, P&G is going to be around. Is Wisdom Tree going to be around? I don't know. Who knows?
Jackie? Yeah, obviously there's pros and cons.
I'm not sure what I can add to this conversation at this
We'll
point. But
leave it. We'll
I
leave
mean-
it. We'll leave it at. We'll leave it off with John and Christina.
Chris told me I had to speak
Shifting,
eloquently at this. I
the
said
only
it's
thing-
impossible. It's Bronx on my birth certificate.
But you know what? I guarantee if you and I went into a meeting, the client's going to either like you or like me, right? It's not a competition, but I like the fact that there are options out there.
Amen.
well,
I mean, I'll win most
I'm
of the
gonna
time.
like
was
them
gonna-
or just
I
like
do
them.
tend to fall to your side of the camp with some of this because, like, an example I have in my mind is some of my top clients. We have the retirement plans. Like I said, we're using the ETFs in there. They're not paying attention to that, but but they want fixed income portfolios on some of the taxable cash that they have. So what we're doing is we are purchasing, municipal bonds very, very specifically. Now they have enough money to do this. So this isn't for, my everyday investor. This is for the people who have, tens of millions of dollars with me, that they have a very specific desire and request on this money. So An ETF is not necessarily the way I want to go, just simply because of the fluctuations of fixed income, just as we've seen this year. So I like having that personal touch so that my 1% or whatever it is for a particular client, again, we've got this over here that we're not touching, but this we're going to pay more attention to. And so that's part of what I'm doing for you for what you're paying me, because I know that they have that very specific need. So I don't like to, if some of my fixed income people across the board, doesn't matter whether it's ETF or mutual fund, when those go down, they don't like it and they want to be able to see why. So I like having the, again, transparency and doing the specifics on a portfolio like that. So I don't know that an ETF in that case is the way to go.
I do want to make sure that for this session, I know some of the sessions I weren't able to do Q&A. I do want to make sure that on our closing session that we do a little bit of Q&A. And before we get to that, though, if we could just get maybe a round of closing thoughts and comments, and we'll just start with you, Christina, on the future of wealth management, how you see ETFs evolving, changing, helping that, the future of the advisory service world.
Yeah, I think kind of what I said earlier, right? I do believe that ETFs are going to involve more with, I think AI is going to play a part in how we do portfolios. The future of private wealth, I think it'll be here in the form that it's kind of evolved into. So for me, it's like I said, it's much more of a family office. And I think you're either going to have a niche market like you, where I'm going you for something really specific, or if you're going to go to private wealth, you got to have more in your briefcase than just ETFs, right? You've got to be willing to do all those extra things for those families, or again, they're going to go online and do it themselves. So I think private wealth is going to turn into two things, either very decentralized in those little pieces, or you got to do everything.
Jack?
I would agree with that, especially working with the types of individuals, because I have more of a family office style as well. My clients are also calling me, because they have a form that they need to fill out to, sell a home and they don't know what to do. They call me about things like that. So, we do, in my opinion, the way that I'm building my business anyway, right now is very specifically focusing on, here's where my service really comes in. We're going to offset, what we can, where it makes sense. And that's just part of my positioning from the beginning. And I do also agree AI is going to transform a lot of this once we as an industry become a little less finicky with it and a little less scared of it, because we just do tend to be that way for a lot of reasons. I see AI really transforming even the way that ETFs are constructed and what happens inside of them. And, we should stay on top of that and really pay attention to it and be able to explain that to the individuals that we're trying to work with.
Corey?
Oh boy, where to start? Well, I think, look, customization, I think at the end of the day doesn't go away. High net worth clients talk. They have ideas. They want to be heard. At the end of the day, how you can deploy that and take advantage of that utilizing technology or AI, I think is going to be a really important factor. So for example, we utilize AI today to do a number of things. So as an example, we have a morning pre-market write-up. Well, AI can draft it, craft it, frame it, in which case you can customize it, right? And then deliver it to clients in real time, every day, via text. And so I do think that communication and deliverables will continue to be the priority. There's a lot of really good manufacturers of these products, of these ETFs and ETNs and ETPs and so on. And I think that they will also continue to hopefully evolve. I'd love to be able to say, hey, at Noble Bridge Wealth, we have an ETF and here's our strategy. We're not there yet. Most firms are not, because you need like a few, maybe billion, 500 plus easily, 500 million, to launch an ETF product at the firm level, right? And launching an ETF is not easy. I've got colleagues that have as much experience as the next folks, and it's not exactly a slam dunk, right? They're missing free throws like the Knicks. So where it all goes, I do think AI will play a huge role. However, I see AI more as a workflow, as that agentic term to support the team in the workflow and the onboarding and the processes, and even the research, because unfortunately, the research that you can get from AI is competing with the CFAs in the room. So where does this take a firm and an advisor and their client? I think ultimately it creates a better end result, but I don't think we're going to get there overnight. And I don't think that as an advisor, you should think about it as a competing factor. I think it needs to be a complementary factor. So yeah, that's kind of my take.
John?
Couple things. First, I think you need to be a chief financial officer for your clients. They need to come to you with all their financial concerns. You need to talk about it with them, and you need to help them execute. If investing isn't really your bag, use ETFs. If you want to grow your practice gangbusters, use ETFs. It gives you a lot of time back in your day. We've already covered my thoughts on individual stocks, so I'll leave that there. But the big thing to me is at the end of the day, you have to be a fiduciary for your clients. That to me was a huge differentiator. Put your name on the door, put your name on the firm, go independent. If you're at a wire, the cocktail hour, come see me. I have these nifty coupons, okay? This gets you 85 cents of the dollar to your pocket. So we can have conversations about that. It made all the difference in the world for me when it was my name and my name only on the business card, because that meant to me that I meant what I said. And they can take it and they can count on that. Huge differentiating factor and something worth exploring if you haven't done it already.
Any closing comments before we open it up to the group for Q&A? I think it's important to when you have a panel, regardless of what their specialty is, that the crowd gets to weigh in and ask a few questions. So we will have Q&A at this closeout session. Anybody want to start? Yes, sir.
Yeah, actually, a couple of points. Okay, first one is on the Bitcoin thing. You know, the woman who wanted to just buy the crypto directly. I believe it was a woman.
Yes.
Okay, and
Dear friend.
The argument for an ETF is that, number one, if she's buying cryptocurrency, she's taking counterparty risk with that company she's buying with. And if she puts it in her own wallet, she could lose the password and
Sure.
lose all of it. So that's why ETF is actually the perfect solution for a person like that.
I would agree. Not going to argue with a friend, though.
Okay, number one. Number two, you know, what's going on in the bookends, I say if you're an eagle, fly high. If you are a cheetah, run fast.
Okay.
You know, you don't have to be one or the other. Find your solution, find what's right for the client, and make it a great day.
Right. Agreed.
Thank you. Anyone over on this side? Any questions? I know we're the only thing between the happy hour and closing out this session, but I have some in the back. A couple gentlemen have their hands up over here.
Hi, Hi, my name is Scott Clark. I work for Allocate Right. We're an AI-driven wealth technology firm. I used to run an ETF business, asymmetric ETFs. We ran hedged ETFs. But you guys have spoken a bit about AI. It's really transformative. I think that this space, I was talking to Jim Gregory earlier. I said, do you have any AI panels that will be speaking today? And he said, we don't. We're not quite there yet. But I think, Christine, you mentioned it. Jackie, you mentioned it. I think we're seeing a transformational change that's going on in our space. It has a lot to do with data. We're a data science company. But I was wondering specifically, as wealth managers, what would be most critical to you if you could enhance it, significantly increase productivities? Corey, you mentioned it, workflows. What would be most beneficial to you as asset managers or wealth managers?
Compliance.
Christine?
Yeah, definitely. Because at the end of the day, as an independent shop, the only thing you've got is your reputation. So do it well, do it right. Otherwise, you're done.
Yeah, I think I said it earlier. For us, it's about enhancing how ETFs work. So, you know, I know, and we watched the market a couple of months ago, right? Probably a few weeks ago at this point, when markets really collapsed, and you watched it. You knew that there was something to be done right there in a split second. And I just think the add of AI allows for that split second decision making. So wherever you guys can help enhance that, it'd be great.
I would add one thing that AI has been very valuable with technical analysis. We do deploy a number of overlay components using Elliott Wave as other technical factors. That work used to be done manually, looking at charts, hundreds of charts. There's better technology to filter, but AI is, I mean, the computing power is nuts. So I would say that's a huge value, but it's easy at this point. Creating a compliance workflow or a portfolio management workflow is much more meaningful.
So the demand is here. There was another question, I think, to your left. My right. Yes.
Sorry. What about products, using ETFs for products that have a lot of fees, commissions, like investing in international markets where you don't want to buy the top 100 companies in the world? You want exposure to Argentina, Israel, Italy, but you want their market, or other products that tend to have at the individual level high fees. Do you guys consider that when you're looking at ETFs, that there are cases where the fees at the individual level are too much, but you can get a basket through an ETF that gives you exposure that wouldn't be efficient otherwise?
I think personally, I think it's the best way to do something like that. I certainly don't know what's going on. It's hard enough to keep up with our own, on the markets here in the US, let alone I'm certainly not an international expert by any stretch. So yeah, it definitely allows, at least for me, to give some exposure there, follow, appropriate positioning in the portfolios, and we're following the index, presumably, and so absolutely, it's a big piece.
Yeah, cost is a big factor. Utilizing ETF Global's database, we can wean those through, looking at risk and cost.
Are you the only one getting paid by ETF Global to be up here? 'Cause
I've-
I've plugged them a few times. I'm just wondering,
zero.
is there something I'm missing? Like,
No.
all right.
Well, maybe.
I'm getting paid
just
as
wanna
well.
know.
I'm getting paid
All
as well. We can
Congrats.
introduce you. I'm just joking. Just joking. Let's see. I think we had another question up front. Anyone over here? All right. Let's give a big round to our panel to close out the day.